Yeah, good evening, everyone. Good evening, leaders in the house. Good evening, traders in the house. Good evening, the entire team of RoyalQ. Good evening, all community members. Yeah, today is another day to look into our technical analysis class. So before Leader Abiola come back, so like our previous topic, the last class that he did with us, I believe a lot of us will have go and make more research about the FVG or imbalance class that it taught. So tonight we'll be moving to another topic, and he would recap about his previous topic. Then we will then move and add two contribution to my topic tonight. So tonight's topic is order block. But before I move on to tonight's topic, please, I want to say something to everyone, because I believe that it's not just about taking away people about technical analysis. Is that you yourself, you must practice anything that will teach you here. You understand? So you have to do more research so that you can have more knowledge about it. So, because the previous class like that, I could remember he discussed about fair value gap for us, and he made some examples about even candles for us, so that we can understand how to identify a better fair value gap that you can see, like the Marabuzu, all these M3 soldiers, all those ones are there, what he taught about last class. So if you are not, so let me try and share my screen. So tonight we will be moving to order block. So, and before we proceed, like I said, that every topic that has been treated here before, all these topics are very, very vital. If you don't understand any of it, you can't understand this phase. So please, you just have to come here, ask questions, go back home, do some research yourself. Please, can you see my screen? Anyone there? Hello? Hey? Hey, Kwa. Hello?
Yes, we can see your screen.
Okay, thank you. So, of course, it's here. Please, if I'm breaking, I can try to adjust. So, because of network. So now, I would like to move on to order block. So, when you say talk about order block, some people call it OB. So you can see it there. It's called order block. Let me just say order block like this. Text. I'm coming. Sorry, I'm coming. Text. I want order block. So yeah, order block. This is what I mean by order block. So what do you mean by order block? Like when we talk about, I want to buy a cloth, so I want to order for a cloth. I want to order for watch. So like you want to make an order for something, you understand? So now that's your order block.
Leader Mr. Abdullah, your network is cracking. I don't know why.
Like we see that.
Yeah. I think network is actually bad. But yeah, I'll take it from there. Prior to the time our leader Abdullah joins us. So he was sharing his screen. So I think probably before he'll be back, so he will come again and he will share his screen. See if his network continues like that. I will share my screen.
Hello, can you hear me?
Yeah, I can hear you.
Yeah,
Okay.
please see that like heavy rain here tonight. So please just have to bear with me. So if my network misbehave, I believe you are on standby. So, Leader Abiola, please. But I'll just try and talk my own fast, because of time.
All right.
So
All right.
please try and bear with me. So let me go back to my chat now. So I'll just go to the right now. So like I'm saying that when you say that order block, like order block is like a place on the chart or like a price zone on the chart whereby institution like people, the market makers, people that really trade in the market, like the banks, all these top banks, people that really trade in the market, where the place where they place their order, that is where we call order block. Like if you are on chart, you see that at times some charts will be moving like so the candlestick will just be like small, 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 small. But at times you see that the candlestick will just come boom like that, like a very long engulfing, either bullish or bearish candlestick will just come up like that. So all these places are where we call order block. But don't rush, I'm still coming. We will surely discuss where how to identify this order block. We will discuss how to know a valid and invalid order block. We will describe some criteria that makes another block a valid one. So, but I just want to understand the concept. So now, the order block is like a price zone. I won't say it's like a price line because it's like a zone. It consists like maybe either 2, 3, 4 price. You understand? So it's like a zone. So if I say like it's just a price line, no, it's like a zone because you have to mark out that price zone. So now it's like it's a price zone whereby the institution where they place their order, anywhere that we see this order block, that place zone trying to buy or sell from, whereby it gives the traders some insights like maybe SMC, like the smart money. So where they want to place their order, like the institution. So we call them institution order block. You understand? So we call it order. How to where we see our order block on our chart. But before we proceed to where we see the order block, there are some things you have to consider before. If you are writing notes, I want to say all these things so that maybe if you are taking some notes, you write some things down. So there are some things that you have to put into consideration if you want to identify a very solid block. One, let me type it out. One is your order block must, I want to type, it must break structure. Let me first write Swift. Your order block
Leader Abiola.
your imbalance.
Leader Abiola.
Leader Osha. Okay, Leader Abdullah, I'll just take the
Then
I'll just continue.
unmitigated.
Network is back. So I'll just take the class from here. So let me share my screen so I can continue from here. If you can see my screen, please type one in the chat box. Or you just unmute and let me know that you can see my screen. Oh, sorry, this is a current trade I'm on. Well, let's just swap this aside and use this. So, Leader Abdullah was saying, Leader Abdullah, if eventually you came back, just I think your network is so bad, so you just a second, so I'll just do my side and then you come and you wrap up. So today's topic we are talking about order block, or we can also use a short term or a trading jargons that we use for it to identify which is the OB. It's still the same thing, order block. So you can call it order block or you call it OB. So in our charts, when you see us draw a chart and then we list, we name it and we say OB, it's still saying the same thing. It's order block, right? So let me cancel this and get the letter. So it makes everything really neat. Order block. So like Mr. Abdullah was explaining to us just now, before his network was misbehaving. So order block is where institutional traders or the banks or hedge funds where they place their order. But I want to really explain this in a layman terms, in which, because I always consider that there are newbies within us and also a little bit of experience traders within us who have more experience, but we have experience more than each other, right? So since we are trading, we need to know all these terminologies and based on the strategy we are trading, those concepts and those terminologies are very essential because at times we could drop signals, right? When we start to create signals in this community, I believe everybody that is on this code has been consistent with this course. When you come here and you've taken notes and you are able to grab what we are doing here, you'll be able to generate signals for yourself. Even when you see outside signals and you see that the traders are trading your same strategy, you'll be able to like identify sharply, swiftly what is on that chart. You'll be able to read the chart, what technical analysis is the ability to read charts, like how we have our literature, we have our mathematics and other materials in which you can read them based on if it's mathematics, you say you are reading numbers. If it's literature, you say you are reading words and letters and all of it. This is the same thing we do here when we talk about technical analysis. So now, let's come back to us. So today's topic is order block. So Mr. Abdullah was telling us that last session that we had, we spoke about fair value gap, and I gave us some example, right? Quite some example. We talked about Maribusu candle. In the previous classes also that we had, we talked about candlesticks. So we are always going to like come back to all these things and recall us because they are very essential. If you don't get those topics, it's very hard for you to advance or move on with the same piece that we are going, right? So because all of these things, they are essential because they are key components that you put together to be able to generate signals. In fact, if I even sit down from here right now, you see most analysis that I did. Look at this trade here, I closed it in profit. In fact, but I won't be showing us here. But if you want, you can reach out and then I can show you. But because it's not a spot trade, I wouldn't recommend or want to say I want to show you. But it's still the same thing, right? So in fact, you see, I have this setup here. I haven't actually come here to pick orders and all of it. And this is the current trade I'm taking. I'm shorting BTC. That's from this area here, and I'm dropping it down here. And you ask from this, all of these things, these jargons that I read, that I draw in my on my chart. What's here? You understand? This is a successful trade. Actually, this is a trade that I picked from here, from this order block here. In fact, you can see, even without me naming, writing this here, if I click on this right now, the way you map up your chart is by actually putting in all the credentials, all the name, actually mapping up your chart very well. This is my order block, right? The same topic that we're talking about. But since I'm an advanced trader, I don't really need to like write all of these things. But once you know them and you are an advanced trader yourself and a professional trader, you'll be able to know these things and spot them even without you naming them. So this will be my OB. So let me actually change the style so you can see. So if I was to change the background and I was to, the borderline is this, and then yeah, middle, and I'll put it as black. Well, I don't need this middle visibility. Okay, it's two. Background and nice. Okay, black. Let's make this very visible and tight. Okay. So now, you can see this is my OB, right? I will just try this, and it's still the same thing, right? We're talking about order blocking. So if I was to write the full sentence, I would say order block. Yeah, and this will change from being this to being order block, right? So if you want to do the same thing I do here, you just double click it, your mouse, and it's going to pop up, and then you go to your style. You can then choose from here, and you map up your charts. You know, there's also this text. You click on text and you write your you write either of the things that you want to map up on there. So before we even get to this, right? So I was just giving you an example of the current trade I'm taking. I took this even without me drawing my order block, but I knew where my order was going to come from, right? I knew exactly where my order block was, and I knew where the liquidity was sitting at. But it takes a lot of time, it takes a lot of practice for you to be able to get all of these things, right? So now let's come back to us. So we said the topic for tonight is order block, and the term for order block is OB, which is still the same thing. So I said I want to define it for us with a layman terms. So for example, let me just give you an example where you have like the provision store, right? And there are actually weekends, right, in which you know that maybe this is your store, and you know the days in which there are a lot of customers that come, there are a lot of traffic in your store. Maybe instead of like the normal during the days that you will have maybe 10 to 15 or 20 clients, but then weekends, maybe Fridays, Saturdays, and Sundays, you normally have like maybe 50 to 80 people, you know. They will be everybody, they are placing their orders and saying, ah, we want to buy this, we want to buy that. And there are chunks of orders that you have to like fulfill during weekends. So instead of you normally attending to 10 to 20 people, you tend to now be attending to like more people. So you see those things that they are buying, those orders that they are placing, order in the sense that they want to buy, for example, biscuits, they want to buy provisions and stuff like that. Instead of the normal, maybe you have a shop there, people are buying like 10,000 or 5,000 something, or 2,000 or something. Now they are buying, they're placing order of like 10,000, 10K, 20K, you know, because they want to refill probably, you know, maybe students and stuff like that, and they're placing a whole lot of orders in which you know that definitely after this order you have to refurnish. You have to actually stock up again, right? So now this is the same thing that happens on our chart, where you would see your institution and say, look at this place, look at. So if I'm shorting, if I'm like selling this market right now, and you see this big Marabusu candle here, what this is telling you? You know, we defined it last time. We said if you want to spot a Marabusu candle, it's very, you will see three Marabusu candle and you always see, there will always be a gap. Look at here. Imagine, you can see, I actually mapped up everything, and you can see there was a gap here. The market created this, right? Smart money joined the market. They pushed this market upward. And I knew that from here, there's liquidity sitting up here from where I marked up with this blue line here, with blue trend line. And then from there, I shot the market. There was a little bit of pullback, right? And this was where my order was actually sitting at, where the order actually fired in from. So before we get to this level, we have to touch the whole topics, right? For we to be able to identify this. So like Mr. Abdullah was telling us, right? Um, we have things that validate our order block. Do you have any questions here on our chat? Okay. Is your question? Okay, no problem. I hope you can see now. So for you to be able to validate a valid order block, it has to break structure. A valid order block would have to break structure. So there will be a break of structure. We talked about, there was a topic prior to the imbalance topic, which was the last one. We had break of structure. So we talked about break of structure. Do we have anybody here who can tell us what's a break of structure? Do we remember? Is there anybody who can recall us what's a break of structure? And what defines a break of structure? So to have an order block, you have to have a valid break of structure. You see, these things, they actually they work as well, like they work together, right? So if you don't know what's an order block right now, a break of structure right now, it's very hard for you to get what an order block is, and you see now. It's very important that you know that. So do we have anybody who knows what's a break of structure? So if anybody can like unmute, let me know where you are. Yeah, we have Mr. NS who's raising up his hand. Do you want to tell us, please? You can unmute. Mr. Ernest. Easy. So break of structure. So we need to have a solid break of structure. So Mr. Ernest, you can unmute and tell us, That way you can brief us and brief everybody on here on the call. What's the break of structure to your understanding, please? Or are you having a question? I don't know. You are raising up your hand. So there should be a valid break of structure, and we should have a valid gap, which is the imbalance. There should be a valid imbalance. And we should also identify from our candles, right? The institutional candle. We want to make sure that there are institutional candle in our charts. So which is also the imbalance. You remember when I talked about the fair value gap, which is also the imbalance, still the same thing, right? The same thing. But we would have our imbalance. IMB, the short form for imbalance is also IMB. So you can say either IMB or imbalance. Or we can also call it fair value gap. Don't be confused, it's still the same thing. Or just gap. You can call it gap. So it has so it's fair value gap, or you can also call it gap. It's still the same thing. See this, all of this, they are the same thing. This is the short form, imbalance, or you call it fair value gap. But there's a little difference between imbalance and fair value gap. They are the same thing, right? But an imbalance, you see, when we talked about the last time, a gap, we say when you want to identify a gap, right? You would see three, some traders will see three soldiers, right? But mostly what I call it, what most SMC traders we call these candlesticks, it's the Marabusu candle. Don't be confused. If you don't remember anything, go and on our YouTube channel, go and watch the candlesticks class where we talked about candlesticks and we defined the candlesticks. and you can also make more researches on how you clearly define uh, candlesticks. So I said you have something like this, right? And if it's a very bullish scenario, what you would have is this without the wicks, and you have something like this. So I want to differentiate. Um, so this is a very like a strong. Um, this is a strong one, right? Strong case. We have three cases, and I defined them for us the last time, right? So this is a very strong case where we have three Marabusu candle without the wicks, right? We also define each candles open and close, and we said when there is so when it's bullish, it opens in a place. When it's bearish, it opens at a certain place, right? So now this is a bullish scenario because definitely we see that this. If I draw my trend line here now, just drag it up forward right here, you will see that this is an uptrend, right? Uptrend, right? But what we want to identify here is far different from that. So I take this away from here just to show you that it's an uptrend, right? So now let's assume that we are having this our green candle here. Let me mock it up so that you can see style. Let me just go background and I go green. No, I think this is the border line. Border, no black. And I go middle and I go green. 100%. So the middle line. The background. I go green. Okay. So these also, let me do the similar thing. I go green. Yeah. I'll make it visible 100%. So it's looking like our normal candle, right? Normal bullish candle. Don't mind my mock-up anyway, but just for you to get a clearer understanding and see what we are doing. So I like to also I like to be more aesthetics all of it. So now let's come back to us. We said the very bullish scenario when you want to identify your IC candles, your institutional candles, when you want to know that smart money is joining the market, the institution, the big banks, the hedge funds in the market, when they are pulling their orders. Like I told you, I made an example with a store, a provision store that you're having, and there are a lot of orders, weekends, from Fridays to Sundays. There are actually days in which you know that, okay, it might even be weekdays, but you know that these days are the days in which I get a lot of orders, right? So you will see market actually booming. So the same thing you will see also here. Imagine, let me just give you an example. Look at this red candlestick. Compare it to this red one. This one is very small, very tiny. Compared to this one is very tiny. You can see here, just a candle is having a candle that covered one, two, three, four, five candles. Just one candle. You would know that smart money is joining the market. But for you to be able to identify smart money easily, this is where we are identifying this. So now you have your gap. Look at, if I was to define it, and I'll say, okay, now I put this also here. And you can call, in this big scenario here, right? So this occasion here, you can see that, so this is a bullish trend, right? So, but don't worry, let me delete this. You know that this is I think if you've attended class up till now, you would know what's a bullish trend and a bearish trend. Right? We talked about this. If you can't remember, you can go watch our previous videos. Right? So now this here, for you to differentiate between, I said our imbalance and fair value gap is the same thing. But here is another thing that you have to know, right? You see, in the very bullish scenario of your eyes, when you want to define your institutional candle, right? When there is a big gap like this, you have to call this is the scenario in which is the highest among the three scenarios, which this you call imbalance. So you pick your test two because this is the highest. You see that the space within it is very big. So you see, from here to here, if I was to measure, this is 0.49%. But the bearish scenario will just give you a little space within it, right? The space might be, instead of it to be like this, it might be half of this, right? It might be half of this. And you will see this candle here meeting up with the body of this, right? This space here, you call this fair value gap. So you call this FVG, fair value gap. So fair value gap, short form for it is FVG. So you would see it's very small, right? But then if it's the very bullish scenario, when you have your Marabusu candles having this big space, this big gap within it. So we said you can also call it a gap, but in most cases, just use imbalance and fair value gap, right? So when the space is smaller, right, and it's the scenario is you see that maybe your Marabusu candles are having the wicks and they are also side by side and the space within the first and the third candle is not that big. That's fair value gap. But you want to, it's one of the confluences you have to see, right? So now you know that institutions, they are pulling orders and it's pushing market upward, right? So what exactly is smart money trading, right? When you say smart money, when smart money, they actually, these big banks, they are manipulating the price, right? They're putting a lot of money into the market, into an asset to pump it so as to get more orders, to get their own orders filled. So when you see there is a bullish trend like this, so they put in billions of dollars, billions and trillions of dollars in the coin, they pump the market so hard that they still have their orders here, right? So we said we were talking about order blocks. So the order blocks now are the unfulfilled orders in the market in which these big banks, these big players in the market, where they have their orders that are not filled. And they have intention of filling these orders because they actually left those orders in our chart. And they are unmitigated area. We call them unmitigated areas in the chart. So it's one of the things that you also that we have as one of our conferences. So you say they are always, it's always not mitigated. So unmitigated, unmitigated area in our charts. So one of the criteria is also that you would see that there are unmitigated areas. So when we say what's our unmitigated area, so there are order block, there are orders, right? In our order book, when you go to, like, for example, your Binance or any of your exchanges, right? You will see that we have the buy side and we also have the sell side where you click your buy and sell. You see that there are numbers running side by side to each other. Let me actually go on Binance, even though I won't be logging in. I'll just show you. I don't know if I can actually. I wanted to show you like an order book. So let me just search for under order book so I can show you. So we have order book in which so if you are seeing my screen, please type one. If you are seeing my screen, please type one in the chat box. So this is a typical example of an order book, right? So so we said order block are places in our charts, are are candles in our charts, right? Spots in our chart in which unfulfilled orders of institutions, right, are placed, in which they later, right, manipulate price to pump or dump prices to those areas so as to grab liquidity. So the liquidity they will be grabbing right now as so guys, are you following? Please, if you can see my screen, type 1 in the chat box. If you are following at all, type understood. So you've seen most cases in most of our exchange, you see something like this. You see the ones that are running red, you see the ones that are running green. These are our order blocks, and these are our order book, right? Where orders are being placed, right? Which are not yet fulfilled, right? Well, this is the same thing the institutions, right? They do, the big banks, they place orders in which means particular areas in our chart in which there are big orders, right? Big money. And those orders, when they are not filled, they leave those spots empty, which will refer to our order block in which institutions are waiting for their orders to file over there. And these are orders that are capable of drawing prices back, right? In which they buy out the seller the sellers, right? The weak sellers in the market, we call them the heavy hands, people who actually like they have this fear of missing out because they feel like the prices they want to sell their asset at is very cheap. But then we have the institutions, right, who wants to buy those orders at those exact prices that you want to sell for. And they buy and then they push the market even higher. So now those people, those retailers that are sold now, they sold early, now they tend to buy those products back even high in a higher prices, right? Because why? Uh, they push the market back down, and you see that the market is falling. And this is what we call manipulations, right? They first push the order up, and then they have orders that are placed that are left beneath all this pump. They have, for example, a candle here, which is your block, which is their block, which they place their order. But first, you will see them push market doing this uptrend. But then later, what you will see in the market is that after it does this, then you will see market will break this structure because it will create a high. In the pullback phase, you see now market now pulling back to the order block, picking orders here. Probably the retailer traders, right? They put their stop loss where the exact spots where they put their stop loss, they come and take liquidity there. So this is why we call it smart money. This is what we could refer to it as smart money, and there are institutional orders that are being filled in those areas. So as most retailer traders, like most traders who trade candlestick, I don't want to be more offensive to say, okay, yeah, if you are trading price action, maybe you are not really doing great. There are a lot of retail traders who trade price action that actually knows what they are doing, and they don't get straight. They actually know where this order, they know market structure. So now you know, if you know where the institutions are placing their order, you definitely want to be trading from those zones, because why? You want to follow the trend, right? You don't want to trade against the trend, because why? When you are a spot trader and you are trading against the trend, you will always have waiting time. Instead of you making money, you will also always find yourself in a dip, right? So now you know that, okay, for you to have a valid order block, which will be in here, right? You have to have a break of structure. So market will have to break a recent high that the market has created. So let me shift this. The market would have to do something like this. So there will be something like this. In an uptrend scenario, you have this market creating higher highs and higher lows, right? And then breaking structure to the upside, like we defined the other time. So it's breaking structure to the upside. So do we have anybody here who doesn't understand market structure or break of structure? Please, if you don't understand what we are doing, you can just type I don't understand in the chat box. So you will see market breaking structure to the upside, and then what you will always see, your break of structure will always be at the pullback phase, meeting all the confluences that we taught us, the imbalance. And when we said if you want to define your imbalance, you have to see you have to identify your institutional candles, which is also the candles in which we create a gap, right? Your imbalance or your fair value gap that I just defined for us. The way to identify your fair value gap from your imbalance is that, when it's a strong move, when it's a very strong and a bullish pattern, you would see three Marabusu candles, right? Which is having a big gap between the first and the third candle. So that scenario is the imbalance. When the gap between the first and the second candle is smaller, you refer it to as fair value gap. And the third scenario also is a very weak one, where you would see either maybe two Marabosu candles, the first and the second, and the one within it, it's more of just a normal candle, but then there's a little bit of tiny gap within it. So that's not very bullish. You want to look for the bigger one, the imbalance scenario. The fair value gap also is really good. So you would see always here, this here is an unmitigated order block. If if there is a break of structure to the upside and the next block doesn't buy into this, our order block here, our OB, order block, this is an unmitigated order block here. This is an unmitigated, this is what we refer to as an unmitigated block. Unmitigated. Order block. Or just simple OB. All right. So this is an unmitigated order block. But then a block in which the new break of structure, now we have an impulsive move to the upside, and the pullback phase now buys into the block, right? For example, this would be a scenario in which we have a block that has been bought. So this block now, for it to create a new break of structure, it bought into it. So you see our pullback phase now buying into this order block. So the institutions are placed this order and it buys into it. But don't forget that we always can have multiple order blocks and they are all unmitigated. Just know that price will always come back to come and fill these areas. So before we go move further too much, so this is what we refer to as order blocks, right? Areas in which orders are being filled by the institution, right? Institution bodies like the banks and all of it, the big banks and the big players in the market, where they left their orders in the chart. Prices hasn't actually gone there, in which you would definitely see those order picking because there are orders that are in the order book that hasn't been placed yet. So for those orders to be placed, it comes to gather liquidity from the little players like us, like me and you, which we also refer to as retail traders, in which when the market is forming higher highs and higher highs, right, and is breaking structure to the upside, we retailer will get excited. We say, wow, I'm in profit, I sell. But institutions, right, they gather this order. They gather this order and push the market even further away from where we thought the price was a premium. They tend to like buy all of those orders that you think it's your premium zone, and then they tend to sell even higher. So this is the definition of order block. So if we have questions regarding to what we just discussed up to now for the order block class for tonight, you can just type in the chat box. Or if you have anything that is not clear, you can just understood. Okay, I love that. Sharif Abubakar, say you understood. Do we have any question, please? For James Agbo, who said I should use my carousel, were you able to follow up? Because I saw the message and I was trying my best to use the carousel very well. I think you were able to like follow up. So if there's any question, please unmute and just ask the question if you understood. I think the network didn't allow Mr. Abdullah to join us again, but that's really cool. So do we have question, please? If we have question, you can unmute. Leader Ocean, please.
Yes,
There are some people who want to ask questions. They say they can unmute.
they can unmute.
Okay, okay. You can try now. You'll be able to unmute. Okay, okay. So you want a clear example, right? Okay. Sorry for that. Um, can you see my screen, please? If you can, please just identify that you can. So let me choose a pair that I'm not currently trading, so I can show you what I block. Uh, so let me clear my chat. No, I just pick a new pair. What pair can we trade? Let's see. Please, you can type in the chat box any pair you have in mind or any crypto pair that you are currently trading that you think we can use for an example. SRP. Do you have anybody else who has any pair in mind? Do you have anybody who has any pair in mind? Please, you can type in the chat box. I said SRP. I'll just definitely go with SRP. So, okay, let's just go with SRP. I don't see that it's SRP spots. Um, let's look for Binance. Okay. So we are on let's go 1 hour. I think I have we are actually using SRPG last time um for classes. So let me just delete all of this. So we said we have to like have a break of structure, right? So if I were to draw my trend right here, so if I was to identify my trend, let's say we are just doing a top-down analysis. I go for my 4 hours and I just say, okay, let me identify a trend first using the 4 hours chart. So this is a clear downtrend from the market is actually ranging, right? If I zoomed in on my charts, we can see that market was doing an uptrend, but then at the moment it's currently choppy and it's not really showing us a clear trend. Market on Solana, SRP is actually choppy. It's giving us a downtrend vibe. In fact, that's creating is doing this currently. So if I were to identify my trend rate, so even though I was just to pick my trend line and I say, okay, let me check and see what this market is doing. So we had a break of structure to the upside here. And then clearly we see that market changed character here. We talked about change of character. So we see that we have an uptrend here, but then all of a sudden there was this change in trend. Look at. There is a choke and there's a change in trend. After we witnessed that, we see that market was currently printing down. So currently, you see that SRP is doing a downtrend. Unless we see market doing something different, these are the downtrends. So we have our overall 4 hours chart, which is giving us a downtrend scenario. So since we know that this is a downtrend, what we want to look for now is a sell, right? You don't want to look for a buy when you see a market printing downtrend. So what you want to also do now is draw your structure to the downside. It's very tricky here if you don't know how to draw your structure. When you don't know how to draw structure clearly, for you to draw a downtrend scenario structure, it's a little bit complicated, but it's not really. So it's just for you to draw the recent, you draw, okay, from here, we can see that there's a structure that was broken here, right? So if I say BOS, break of structure, BOS, and then we also have another structure broken around here, but I will not mark all of them. I'll just mark the main one. And you can also see market breaking structure to this downside. And for we to pick our order block, right here, the next place where we should be expecting price to pick your orders from, it wants to meet your criteria, right? So now you see that market actually came here. There was this, but there is no fair gap in here. So we can actually, this is not a clear trend, right? So if I was to pick my order here, I don't have the criteria as met. There is no clear criteria as met. We said we want to see our institutional candles, which will be three Marabozu candles, the bullish scenario, the medium bullish, and the one which is not actually bullish. So if you check here from this, there's a trend that is a downtrend, right? So if I pick my cursor here and I say, okay, this market here created this and then created this downtrend, this pullback, and then created this lower high, and then created this again, created this, and then created this, and then it's created this, and it created, and this is what we are calling internal structure, because this structure are found between an external structure, which will be our higher time frame. So now we see market breaking structure to the downside. So we see market breaking to the structure to the downside. So now you can see continuously, and currently market is here, right? And so you can currently see now. So if you were to pick, if you see here, right? They are actually the smart money actually joined this market here. Look at, see this scenario. They came to pick this order from here. There's an order block here, and it's currently printing downward. Even though you see the scenario is not that big, because if you check your first, second, and your third here, right? There's a Marabuzu candle here. There's a Marabuzu candle here, a bearish Marabuzu, and we have a bullish Marabuzu candle also here. But this scenario is not that it's not that good. It's very tiny. That's why you see this structure that we're breaking down here. It's not a big wave, right? Look at, let me show you. Look at, see from here and here. It's very tiny, right? Before market did all of this, there was this scenario first, right? And you can see there is no, between the first and the third candle, there is this gap, but it's not very sufficient. That's why it's not that bullish. That's why you see market. But then now you've defined your institutional candle, knowing that this is your institutional candle, and you know that there is this trend, right? There's this impulsive move to the downside, impulsive move to the downside, right? There's this impulsive move to the downside. What you will be expecting next is a pullback leg. So there's this impulsive move to the downside. What you will be seeing again is your pullback leg, which will come and pick orders. And it came to pick this order here. And what do you want to refer to now as your order block? It's here. So now for you to have your order block is something around here. So it's your last. So if you want to, so we'll discuss this for that, but I'll actually tell you, because we are trading, we are actually talking about order block. So our order block is our last candle that printed the down candle after so there was a pullback, and we had the last buy candle that pushed market down. That's where that's where your order block is. So this is not, if you check, the last buy candle is this one. The last buy candle is this, before market went really downward. So there will be like a pullback. If you see from here, there was this pullback, and then market pushed down a little bit, did another pullback again. So let me show you so that you can see. So there is this pullback. Right? creating this break, and then there was this one again that broke this market downward again, and then there was this pullback, and then there was this move downward. So now our last buy candle will be this guy here. This guy here. So I'll expand. And then I will draw my other block here. And this also is another block because there's a structure here. Look at, let me show you. There's a structure that broke around here. There's another block here, and the last buy candle was this one, this guy here, and there's another block here. This is actually mitigated now. We can see market later came here, right? It broke this order, didn't resist. This other block didn't resist. It came for this other block here, and then the market pushed down. But this is a valid order block. This is a valid order block. So we have two order blocks here. For the case I told you the last time, I said we at times they are left unmitigated. But we saw this, you see, this market, they pushed it up to come to pick order from here. And our last buy candle, in the down scenario, the bearish scenario, you will see order picking from our last buy candle. But if it's a bullish scenario, the orders will be picking from the last buy sell candle. So now what did he do? Tapped in and pushed down. And this is what we call our order block. So I hope, Mr. Ines, you were able to understand here what we define here and everybody else in the channel, in the class, in the section. So if you have any question, please type in the chat box, or if you are not clear with what we are talking about. And I hope I was sharing my screen. Okay, please can you find another pairs with?
Thank you so much, Leader Biola. Do we have any question, please? We'll just take one or two questions so that we can round up today's meeting or today's class. Do we have questions, please?
Well, there are any other question. Mr. NS said we choose another pair. But don't worry, maybe by the next class, by the time we're talking about our next topic, before we move to the next topic, we would use more scenarios, maybe a bullish scenario also, to define our order block. And then what I would recommend we do is, if we already are not doing that, to always come to this our technical analysis class as also other classes with a notebook, because when we are, as soon as we are completing our all our topic in our curriculum, we would be inviting a lot of our members to come and analyze chart for us, and there will be always prizes to win from it. Because for us to know that you get the things that we are teaching you, we want you to be able to like generate signals for yourself, and be able to also, and then with the fundamental analysis class, I know most of us would have forgot a lot about our fundamental classes as well. So we'll be using the RoyalQ, for example, the interface, right? That'll be the class for Mr. Leader George or Leader Ocean, right? We'll be picking pairs, and we'll be saying most of our members to analyze those charts to be able to generate signals. And then this will be like beneficial if you are taking a winning trade and you know that you know how to analyze, and you can boldly put it on in the community, and people can benefit from it, because you are trading and you are making profit as well. And the other people also can be seeing what you are doing, the reason behind why you are choosing that particular trade. Not that you are just trading. Yeah, it's true that you can actually be making a lot of money from a particular pair, but if you don't have reasons and you don't have valid reasons why you are taking that trade, it won't last forever. At times you get stuck on a pair for no reason. So
All right, thank you so much, the Abiola. Um, yeah, I think that would be best. Next Zoom we can do more examples because we are running out of time.
yeah, Rita, if you're my easy. Yes, bullish means yeah, a rush moment. Yeah, it's when there is a lot of trend in the market. Yeah, you can also say rush. Yeah, from the example I made to you, like you're having a shop and there's a rush moment. In fact, you know that when there's a rush moment, there's a lot of money coming in, right? If you're having a shop and there's a rush, definitely there's people, a lot of people coming in and they want to buy a lot of things and there's a lot of money. So which will be also like even at times, let's be honest, when you have a shop and you see people are asking, they want to buy, maybe they are not getting those products from other places and you are the only one who is having it. You can even decide to say you want to add more money to that particular to a lot of items that you are selling because you know you are the only one who has that product available at the moment. And that's what happened also in this our space. All the prices is going it's bullish, the more the prices are actually high. Because if BTC you are buying at 90,000 now, and there's a lot of orders for 90,000, before you know it, the people who are having won't be selling for 90,000. They want to sell for 91. Some want to sell for 92. Some also want to sell for 95, which will be giving them more profit. So yeah, bullish means when prices are being pushed up.
All right, thank you so much. And to everyone that took out time to attend, thank you so much. Tomorrow, I believe, is weekend, and our Zoom meeting is 5 p.m. Okay, so we have Zoom meeting tomorrow by 5 p.m. And we also do have TikTok live by 12 in the afternoon. So please, you can invite your prospects to our TikTok live. You might have friends, families, loved ones that love TikTok. They can join us on TikTok for a brief one. That's 12 in the afternoon, and our Zoom meeting or our Zoom class is by 5 p.m. So thank you so much, everyone. The recordings will be out, I believe, tonight, so you can access the recordings. So we'll see you tomorrow. Bye, everybody.
Bye. Bye, everybody. Bye, little Shane. Bye, little George, and everybody.
Thank you so much, leader.